Hey guys, it's Larry with the Financial Lift, and today I want to talk about home construction loans. And this was actually a requested video, so if you ever have any requested videos regarding the home buying process, feel free to comment down below and make sure to subscribe so that we can stay tuned for those videos. I want to start with what exactly is a construction home loan. We're going to be talking about the situations where you either have a plot of land or you're buying a plot of land and you're basically building a custom home. This is very different from, say, a situation where you see those big giant signs where they say, in this new upcoming neighborhood, homes start from $200,000 and you can select layout 1, 2, or 3. That's very different from the situation we're talking about. And I'll cover that in a future video, but right now we're talking about when you kind of want to build that custom dream home that you've always been imagining. So the first thing you need to know about a home construction loan versus a regular conventional loan and a conventional buying process is that it's going to be a more involved process with the lender and in terms of having to coordinate with the builder. If you think about a typical home, you can appraise that home at, say, $200,000, so the lender feels comfortable giving you a mortgage valued at $200,000. But with a new construction home, you don't really know if that home is going to be poorly built, and so they lent out $200,000, but once it's finally all built and constructed, that home is actually worth $150,000. So that means inherently there's going to be more risk from the lender's perspective, which is why with a typical construction loan, it's typically done in phases. So let's say from the builder's perspective, phase 1 is completing the foundation. Once the foundation is complete, then the lender will send somebody out to basically inspect that foundation or appraise it, and then the lender will actually distribute those funds usually directly to the builder, and then phase 2 can begin, and the builder starts, let's say, completing the framing, and once the framing is done, the lender will distribute the funds for that, and so forth until the whole entire home is completed. During this time, it is possible for a lot of things to go wrong because it's typical with construction. Something that was expected to take 6 weeks actually ends up taking 10 weeks. So it can be a little bit of a stressful process, but with a construction loan, usually during the construction phase, you're only paying the interest portion of that construction loan. Your loan balance repayment doesn't actually happen until the home is completely constructed and the builder has been fully paid. And then in which case, there's kind of two different options, but in general, the home mortgage process is going to work the same. It's important to understand the two main different types of construction loans because one ends up basically automatically rolling over into a regular type, conventional type loan, whereas the other, you actually have to go find out and seek another home mortgage. And I will also be covering what's known as a FHA construction loan, which basically has the same advantages that a regular FHA loan would have as well. The first type of home construction loan is what's known as a standalone construction loan, or sometimes also referred to as a construction only loan. And basically this is meant for just the construction phase of the project. So after the construction is actually completed, which is typically a year for most of these construction loans, then you're going to actually have to go out there and pay the balance of your construction loan with a new home mortgage loan. Now, one of the main benefits of a standalone home construction loan is the ability to put down a future bigger down payment sometime down the road. So in general, with most home construction loans, you are going to have to put 20% down right now. But just for an example, let's say you want to put 20% down on a home and you only have $20,000 saved right now. That means the most you could afford for a home is $100,000. But let's say during this construction phase for 1 year, you end up having a bigger saving because you're only paying that interest portion on that construction loan. So then after a year, you end up saving an additional $20,000. So in total, you have $40,000 saved up. That means you could afford a down payment for 20% for a $400,000 home. So you may be able to secure a bigger mortgage by having this 1 year delay because you're only paying that interest portion. But there is a major cost to this as well. So let's say the market interest rate for mortgages right now are at 3%. That's, around the range that you're going to get for that home construction loan for that 1 year. That's the interest rate is going to be 3%. But let's say after a year, the market interest rate for most mortgages goes all the way up to 5%. Then now after that year, when you go to get a new traditional type mortgage, now that interest rate is going to be at 5%. So you're paying that 2% difference rather than the second type of mortgage. But the reverse could also be true as well. Let's say that the market interest rate right now is 5% and you think that the market interest rate for mortgages are going to drop sometime in the future, let's say 1 to 2 years, then it may make sense to have a construction loan so that way you can kind of delay and lock in a future lower interest rate. The second type of construction loan is what's known as a construction to permanent type loan, and it basically combines both phases of the construction loan. It has a construction loan phase as well as the traditional or permanent type mortgage that most people are familiar with. And just like any traditional mortgage, they have a variety of options, whether it be 15 years, 30 years, or a fixed interest rate or variable interest rate. And it basically has two main advantages of having this construction to permanent type loan. The first being is that you're locking in that interest rate. So right now, if I'm about to start construction, I can lock in the interest rate right now. And that works to your advantage, especially if you think the interest rate is going to go up in the next few years. The second advantage is just the fact that it's convenient. I don't have to worry about after the construction phase of my loan and I'm about to move into my new home and I'm all excited, but now I have to worry about getting a new home construction or a new traditional permanent type loan. You don't have to worry about that. It's already done. And I should also mention one of the things to consider, especially if you're kind of on the fence between a standalone construction loan or the construction to permanent type loan, is what are the fees associated? Because if I have to have two different mortgages and have to have the same fees that I'm paying both times, then that may have added costs that I'm not willing to pay. Now, when it comes to some of the construction loan requirements and rates, one of the things you have to consider is that typically, whether it's a standalone construction loan or a construction to permanent type loan, you're going to have to put anywhere between 20 to 25% as a down payment. If you think about it, it makes sense because from the lender's perspective, there's inherently a lot more risk. So they want a bigger down payment to make sure that you're going to fully see the construction of this home. Because if halfway through the process, you decide you're not interested in this new home or, fully seeing that it gets completely built, then now the bank is basically in charge of having to sell a half-baked home or, deciding whether or not to fully build a home. And it's just something they don't necessarily want to deal with. So having that bigger payment makes sure that you're fully invested and making sure that that home actually gets fully built. Now, in terms of the credit score, the same thing applies here. There's more risk involved. So typically most lenders are going to want to see a pretty high credit score, usually in the 700 range or above, with 680 being about the minimum. And the same thing as any other traditional loan applies here too. If the higher credit score you have, most likely the better interest rates are going to secure. It's also going to be a requirement from the lender's perspective to make sure that there's actually a set schedule in terms of how the phases are going to be complete. So phase one is the foundation. How long is it going to take for that phase to be complete? They're also going to want to make sure you're working with a licensed builder. And in some cases, they're going to want an actual contingency amount built into the loan. So for example, you're thinking that the roof is only going to cost $20,000. That's the builder's estimate. But when it actually comes to fruition, it actually costs $25,000 for that roof. So sometimes lenders want to build that contingency amount into the loan. Now, to be a little more specific on the process of a home construction loan, one of the very first steps you're going to want to do is make sure you seek out a trusted licensed builder that actually has a really good reputation. And a lot of people that have a new home or a constructed home can probably attest to this, but the reality is a lot of homes offer like a 1-year type all-inclusive warranty on the home. So if something like a ceiling fan goes out, then you can call the builder and they'll replace that fan or redo the work for you. But the reality is after a year you try to call up that builder and they're nowhere to be found, or they kind of keep dodging your calls. Then you're kind of put in this tough situation because the most you can pretty much do is basically just write a bad review for the builder, or you're going to have to sue over this $200 fan, which really doesn't even seem worth it. So then you're out $200, which is a significant amount of money to you, but at the same time not necessarily worth taking this builder to court or something like that. So you really want to make sure that you work with a builder that's not only trusted locally in your area, but that has a reputation and proof that they actually uphold their warranty. Now the next step is you're going to want to make sure the builder actually has approved plans according to local codes. Whether that means working with an architect or an engineer, you're going to want to make sure they have these approved plans, as well as a detailed phased plan like I was mentioning earlier. The bank, the lender, is going to want to see phases of completion so that way they know when to distribute these funds. Now once you actually have a builder and these plans in hand, then that's when you actually want to start working with a lender. And you're really going to want to make sure you're working with either a local or regional type lender. In some cases you can work with national banks, but the problem here is with national banks, they don't necessarily know the regional markets or the area you're looking in. So they don't know the inherent risks involved with, is this an upcoming new real estate area or not? So when they're kind of deciding to loan you money to build on a plot of land and build a new home, they're not really sure if it's going to be worth it or not. And as always, I highly recommend that people go to 3 to 5 different lenders to basically see and compare the different interest rates and different terms that they're offering to you. Because even in real estate, when we're talking about something that's worth thousands of dollars over the course of 30 years, even just a small little percent difference can save you thousands of dollars. Now there is something known as a FHA construction loan, and it basically has the same benefits that a regular conventional FHA loan would have, meaning that if you have a low credit score, and we're talking like 600, low 600 type range, as well as a lower down payment, in some cases just as much as 10% or even less than that in terms of securing a loan. But it does come with all of the drawbacks as well. For example, on a regular FHA loan, it has a special mortgage insurance requirements that you can't necessarily get rid of too easily. And on top of that, there's usually a lot more lender and documentation involvement than a conventional type loan. And I did a whole video on FHA loans, so I'll link down below, that kind of goes more in depth into a regular FHA loan. And I'm not necessarily an expert in FHA construction loans. In fact, I've only really known people that have gotten a regular FHA loan. I've actually never really met anybody that's actually gotten an FHA construction loan. So I highly recommend talking directly to the source. Go to lenders that are FHA construction loan approved for those types of mortgages and ask them the questions that you may be having. But I will just give a little bit of input here, which is to really consider why you want a construction type loan. And what I mean here, it's basically not necessarily a secret that building your own custom home is not necessarily going to be cheap. It's definitely more expensive than just buying a 10-year-old home. And typically people who get an FHA loan either have bad credit or they can't come up with a down payment, which in some cases it may have been past bad decisions, but in some cases that's kind of a sign of bad financial habits, which means that if you're going to buy a more expensive home, maybe you should rethink and reconsider and just consider buying a 10-year-old home and going with a typical FHA loan or even a more conventional type loan. Now, of course, there are always exceptions to that. For example, high income earners that either have bad credit or never cared to build credit in the first place because they always do things by cash. And so in that case, it may make sense for them to go with an FHA construction loan. Now, if you have any further questions, feel free to comment down below. Like I said, this video actually came out from somebody asking a question in the comments. So feel free to comment down below and I'd be more than happy to respond. And in some cases, like this video, I'll make a future video regarding that. And if you like personal finance or videos regarding car or home buying type process videos, or even career advice type videos, consider subscribing to the channel. And as always, I hope to see you in the next one.